Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrency, commodities, and indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to do a deep dive technical analysis perspective on a trade that I took on XRP this morning that I shared with you guys on Zoom. I tweeted out to you all that I was going to host a public Zoom call. Some of the students showed up. Absolutely outstanding. Lots of gems. You're not going to want to miss this deep dive technical analysis perspective on XRP. Without further ado, let's get started in the video breakdown. All right, cool. So I have obviously probably a couple of people from Twitter because I put the Zoom call publicly on Twitter. A couple of students here in the Zoom call. Blessings to you guys all. Thanks for joining. Real fast. I'm in a short position currently on XRP. Stops are moved to break even. It resulted in a 1-to-4 risk to reward ratio before I took partials. I'm letting this trade float to see if we can come into 55 cents. I'll break down the trade for you guys right now. What I really want to cover for you all in this Zoom call, this is going to be very detailistic. I'm going to took some notes here for you guys, how I was able to utilize the higher time frame in tandem with the lower time frame to seriously execute a beautiful risk to reward. And that was probably my main confluence in this trade, was orienting what I saw on the higher time frame in tandem with what lower price action information was telling me. We're going to dive into pattern recognition. We're going to dive a little bit into lower time frame manipulation, how I coexisted that with higher time frame bias, i.e. the higher time frame being bearish, and then the lower time frame giving early buy scenarios during the manipulation window in the New York session today on the lower time frame. And then we're going to talk about how I was able to gain confidence via proper RR, meaning that I was putting my stop loss in a proper place because I was trading this on my leveraged account on CYPRX. And then how I was able to logically incorporate valid target areas based off of just liquidity in the market, where the banking institutions most likely are going to head. Obviously, of course, in the opposite direction of where the majority of everybody else thinks it's going to go, right? So just surrounding logic on the trade. You guys can see my screen here. So we're going to start with pattern recognition. So I have here for you guys marked off 4H through 1H. And then on the right-hand side, the 15-minute through the 1-minute, okay? So on the higher time frame, I'm going to show you guys how on XRP, the charts have been making this same significant pattern. Now, if we're trading in tandem with the higher time frame and the lower time frame, we want to see this same pattern recognition on the lower time frame before we look to execute inside of the market or inside of our window of opportunity. Whatever trading session you're looking to execute in, we understand that the market makers trade off of higher time frame. So if we see the higher time frame showing us the willingness to grab liquidity from previous areas of interest or highs, i.e. trading off the most premium range, then we know that on the lower time frame, we want to look for the same thing. We don't want to react to the market until we see the market show us a willingness to grab liquidity from highs. Why? Because we know that that is an interest, an institutional interest in the market when we see the market grab liquidity and shift momentum, okay? Once we've seen this pattern, we know that this entire leg right here was created by institutional interest in the market, i.e. in premium price if they're selling. Right? Whereas vice versa, as above, so below, it would be the same thing if I inverted my charts. We're looking for the most discounted price if higher time frame is bullish, right? Are you guys tracking so far? You with me? I'm just kind of trying to warm you guys up to what it is I'm going to talk about today. All right, so now correlating this with the lower time frame, we can see the same exact pattern take place on the lower time frame. Okay, so on the lower time frame, this is the same pattern. Okay, so here's this down move from A to B. On the 15-minute structure and the 1-minute structure, it'll be the same thing. An A to B move that comes back for the liquidity above that A to B move. And then fractally, I highlighted these areas in blue for you guys. We see the same pattern, okay, where we see, again, the market create a grab of liquidity or show us a willingness to attack highs. We see a high here attacked and we see a high here attacked. Then the market shifts momentum, okay, and creates a new swing low. Same thing here. The market attacked highs and then created a new swing low. This is us as CYPRX traders understanding when the institutional order flow is actually being input into the market and only executing trades when we see this type of pattern, i.e. pattern recognition, okay? So you see here now on the lower time frame, it's the same thing, But on the lower time frame, this would be happening up here in this area. Okay, so that's where we're looking to get in on these trades. And it doesn't matter if you're looking for buy scenarios or sell scenarios, it's the same thing. Being patient as a trader and having discipline to only react to the market when you see the CYPRX confluences play out in the form of grabs of liquidity and manipulation in the form of retail money during the manipulation window, whatever session you're trading, whether that be Asia, London, or New York, reacting after price has respected a psychological level or rejected a psychological level that leads to a break in market structure, whether that's bullish or bearish, and then entering in at a premium or discounted price. All right. So just pattern recognition, you guys pay attention to these patterns that I drew from you guys. You guys see the consistency that the market continuously shows us the willingness to manipulate buyers, grab liquidity from highs, and make new swing lows. We're not reacting to the market until these three things have happened. We see a market impulsive move that fakes people out, that grabs liquidity, that leads to a market break in structure. Once we have these three things, we then can seek to execute trades in this general area or to the right-hand side, right? Same thing here on the lower time frame. We see the market show us the willingness to impulsively move the market and fake people out, to grab liquidity, and then break market structure, showing us the real momentum behind the move. Once we see these three things on the lower time frame, we will look to execute trades. Okay. So it's same thing, correlating higher time frame analysis with lower time frame analysis. You're looking for the same thing. So many people will not understand the directional bias of the higher time frame because they're not trying and attempting to base their trades off of logic. They're trying and attempting to base their trades off of what they think the market is going to do. Don't do that. It'll leave you dry and you will lose a lot of freaking money in this market. Okay, so going into this trading session, I'm in this current position. I'll show you on the lower time frame. I'm on the 5-minute chart going down. This was my trade entry. This is the trade entry that I'm going to break down today. Okay, very nice, beautiful 1-to-4 risk reward ratio. It's still currently floating in profit. I believe I only have, hold on, I've got about 15% left running on this trade. Okay, so this is the entire trade that I'm going to break down for you guys today, but I'm going to start all the way on the higher time frame of what it is that I saw. From the 4-hour, I'm going to jump down to the 15-minute, and we're going to go over 15-minute premium price tracking, or what I like to call advanced tracking. I think the only person, aside from some of the content that I've uploaded on the CYPRX course, the only person that I've ever taught this to in person was Ezra. Okay, and he saw this work firsthand. And it's just based off the logic and the ideology that the banking institutions piggyback off of one another or previous orders from previous sessions or previous trading sessions in the form of the most premium and discounted prices, okay? Where you can understand greed and fear from an institutional level coexist with the retail level in a speculative way where banking institutions are doing the same thing that you and I should be doing, which is if we're selling a currency or a commodity or a foreign exchange pair, whatever the case may be, should be looking to sell at the most premium price, right? At the highest price possible that you can seek to sell something from to get the best risk to reward. That's what you should be doing. Vice versa, in a buy scenario, you should be doing the same thing, waiting and being patient to get the most discounted price so you get the best bang for your buck, right? If you don't think that way in the market, you're going to constantly get manipulated out. You're going to constantly be guessing tops or bottoms. All right. And it's just going to be it's just going to be a shitty experience for you, honestly, overall. All right. But so what do I mean by this? Looking at XRP on the 4-hour chart, we can constantly see the market show us that pattern where it's institutional order flow is forcing buy positions to grab liquidity from highs and make new lows. Okay, so this is the first area that we see that happen at. And this was when I was covering XRP around 79 to 77 cents. And I said to you guys on Twitter and on YouTube and all inside the CYPRX group chat that if we hold and close below 77 cents, we are going to have that melt off. Okay, this is why, because the market was continuously showing us the willingness to grab liquidity from highs and make new lows. Coming over here to this price leg, you see the same pattern. We see a little tiny wick above a high, and then the market shoot down and make a new swing low. Same thing here. Here's that pattern again. We see the market wick through a high to the left-hand side and then make new structure lows. This is the definition of bearish order flow on the 4-hour chart. Okay, so as a intraday trader and a scalper, we can utilize this information to our advantage because we know that until these levels are broken, right, in the form of a bullish break and hold and close above these levels, okay, where we can see that the market showed us the willingness to grab liquidity from highs and stem lower, then we are in a downtrend, at least temporarily, right? We are not going to be looking to trade against the higher time frame. That would be like a going against the tide. You don't want to do that. You will get capped out of the market time and time again. Now, the only way, in my personal opinion, that you would want to trade against the higher time frame is if you're looking to accumulate a long-term portfolio to dollar cost average in. But again, I'm talking about a leveraged account, okay? So this is just me breaking down higher time frame analysis, what I saw, my mindset going into this trade. I saw bearishness on the 4-hour. So coming into this trading session, I analyze that and I say to myself, coming into every session, I do this from the 4-hour down to the hourly, 15-minute, and so on before I look for executions. Now I have a bearish bias where I have in my mind that the higher time frame is bearish, or at least currently it is bearish, meaning that if I want to trade in tandem with the higher time frame, what should I be doing? If the higher time frame is telling me it's bearish, what is a scalper and an intraday trader at that point in time should I be doing?
Looking for short.
Okay, looking for shorts. You're in the right direction. Looking for the most premium higher.
Looking for lower high.
Yes. Okay. Looking for a lower high. You guys are in the right direction. Right direction, right mindset. That's all that matters. We should be looking as scalpers and intraday traders as the most premium price to sell from on the higher time frame, or something that correlates with higher time frame premium, right? If the higher time frame is in a bearish market temporarily, then we know that the banking institutions like to sell from the most premium ranges on the higher time frame. Then we should be looking for higher time frame swing highs to sell from. It's that simple. Okay. So all I simply did to catch this trade, now that we know all of that information, a lot of people would be like, oh, hindsight testing is bullshit and you shouldn't do it. That is incorrect, because look at this. I will replay price action for you all the way up until this New York session. Look at all the price information that we would have had. We would have been able to distinguish all that. So now I'm going to get into 15-minute price tracking. So what we're going to do is we're going to go down to the 15-minute chart. We know that the banking institutions like to piggyback off of where they sold from previous days if higher time frame is bearish, right? So what we're going to be looking to do is track the 15-minute sell regions or premium ranges, or whatever people like to call it, supply, resistance, right? There's 1,000 different names for it. It doesn't freaking matter what you call it, because that does not matter. Remember, the market makers don't use vocabulary like that. Do you really think that bank and institutional traders are sitting there when they're putting these orders in the market and like, oh, XRP is bouncing off resistance, I'm going to sell right now? No, they don't do that. Okay. That is a laughing stock in the market if you think that way. What we're looking for is the most premium price in the form of psychological levels to sell from, where bank and institutions sold from the previous day, if we know that the higher time frame is bearish. So looking at the 15-minute tracking methodology that I teach you guys, if we're looking to trade a New York session, we're going to be looking at London and New York session areas of interest that the bank and institutions sold from previous days. Okay, so correlating this, I had this area marked off from this New York session where we can see the same exact pattern take place. So I have that highlighted here for you guys with an arrow. Okay, so this New York session was 2 days ago. Okay, this is April 30th, and we can see that same pattern on the higher time frame. This is again where pattern recognition comes into play. We already know, number one, that the higher time frame is what? Bearish. By how? Identifying that the market makers are showing us a willingness to manipulate buyers, to grab liquidity, reject psychological levels, and make brand new swing lows. Okay, now look at the same thing that I just said to you guys. We see the market showing us the willingness to push to the upside, grab liquidity, entice and manipulate buyers during the manipulation windows, and then reverse and make new swing lows. So we are in a bearish market as well on the lower time frame, or a bearish order flow, or whatever it is that you want to freaking call it. Doesn't matter, as long as you understand that the overall interest on XRP right now is big whales and institutional order flow taking sell positions. Okay, so now let me get into the CYPRX strategy right here in this area, where if we were to just highlight the manipulation windows in both of these regions, I'll make these boxes orange for you guys real quick. Manipulation box during this for Asia, and then same thing, manipulation box during the region for London, we can see that both Asia and London did what? They manipulated buyers to build liquidity underneath of lows, to push the market up, grab liquidity from previous highs to give themselves the most premium price, and then they took short positions. Passing price action over to New York, we see that the market made a lower low, lower high, lower low formation. It's that simple. So now this is an area of interest that we know logically we would need to break back above and hold and close bullish above in order to reverse our bias. Okay, it's just logic, right? Because why? The market made a swing high, the market made a swing low. So logically speaking, as long as this level holds, we know that the banking institutions are looking at this area as premium price. Now, fast forwarding over to this New York session right here, we see the same freaking pattern, guys. Again, I'm not making this shit up. It's right here in front of you. We see again, London session. They sold from here the previous day. They're going to give themselves the most premium price. So what did they do? Manipulate buyers, attack liquidity, and make new lows, right? So we see a reoccurring trend. And we have an area of interest. Again, this is the 15-minute chart. We're looking for session highs and session lows, okay? So we have a session high during now 2 London and New York sessions that we know logically we would need to break in order to reverse any type of bullish bias. We now have 2 areas of interest. You guys can clearly see that until we break and create a new high above these levels and hold and reverse and start to create the definition of an uptrend, we are in a downtrend market or a bearish market, bearish order flow. The market makers are more interested in selling at this premium price, okay? So now we're 2 sessions in a row, back to back, where the market makers have showed us a willingness to repeat that same pattern that I went over in the beginning, which was a false impulsive move to the upside, rejecting psychological levels after grabbing liquidity in the manipulation window, breaking out of that manipulation window, and then making the institutional move, okay? So that's 1 day, now 2 days of that same pattern. So all I was thinking going into this trade was I identified on the higher time frame, we are bearish. On the 15-minute chart, the past 2 trading days, we are bearish. How? Because London and New York consistently have made the same pattern 2 days back to back. Now all I did today, I'll go ahead and I'll unwind all of this price action. All I did was I waited and I looked for that same exact freaking pattern. And I want to show you guys the level of accuracy just by understanding pattern recognition and being patient to trade outside of the manipulation window, how you can freaking score on these charts. It's literally insane. And it literally just took me like 2 hours of being patient and made like, and I don't even, let me just measure this out. In pretty much 4 hours, okay? I mean, I don't know where else in the world you can do that. And that's not to brag or boast. It's to try and wake people up to show you that this strategy is trying and attempting to teach you all what the market does on a consistent basis if it is bullish or bearish. If it's bullish, it's going to do the same freaking thing as above, so below. If you understand anything about the universe and how the world is all mirrored, right? I'll get into that in another video, but positive, negative, right? It's the same thing with the market. The market has to do the same thing to go higher that it has to do to go lower. In order for the market to go lower, it must first go higher. So when you see that pattern and you see the market going higher and reversing after grabbing liquidity and then breaking structure, you know that the market makers understand the methodology behind as above, so below, and they are manipulating the shit out of people and enticing them to do the opposite because everybody's brains are freaking poisoned into understanding and thinking that impulsive moves actually exist in the market in the form of candlesticks. They fucking don't. So check this out. Understanding all the manipulation that I've taught you guys in the CYPRX course material and especially the 2.0 material, right? What can we see here? We know that this red area, I extended that over to the right-hand side, is an area that we would need to break and close bullish above before we reverse our bias. So I had this area marked off and I was saying to myself, as long as we can hold beneath this level, I will be looking for sells. If we break above this level and start to create higher highs and higher lows, I will stick to my guns and I will just wait patiently to see if we get a market reversal. And if not, I will reverse my bias and look for buy entries. Okay. So we never got that. So that was one freaking confluence right there, right off the back. I was like, okay, cool. We're staying beneath this level. That's too plain and simple. Now let's go down to the 5-minute chart so I can show you guys how I marked off manipulation. We have the manipulation window right here. Okay. So I'll go back and I'll start during the New York session open. New York session open, I had these areas of interest marked off, and I said to myself, okay, possible trend line liquidity forming. If we don't come and attack this trend line liquidity, maybe this is a bullish reversal if it breaks above this red highlighted area. But we never got that. What did we get? Immediately out of the 8:30 a.m. window open, we got trend line liquidity. And for me as a trader, when I see this, I'm like, this is too simple. We have trend line liquidity in the manipulation window. We have the market again showing us the willingness to manipulate people up into highs to entice buyers, but we see that there was a high here that was grabbed, okay? And now all I simply did was say to myself, we have buy manipulation that tapped into a high. Can we get that pattern recognition, which is the market showing us a willingness to push and manipulate buyers, grab liquidity from highs, and create new structure lows? So out of the manipulation window, as soon as the 8:30 a.m. region took place, watch what happens. We come out of the 8:30 a.m. region, boom, attack that trend line liquidity, tap right beneath it. Look at this freaking candlestick. This shit is hilarious, okay? Any leveraged buyers who are impatient and can't wait for the session to actually take place, that had their stops moved to break even, that bought this price action right here, all got liquidated and destroyed right here with this wick. Because this wick, it looks like it only went to the 61400 level, but I guarantee you with spread, it went all the way down here. I guarantee you it went all the way down to like 61300. Okay. And it stopped out and grabbed all the liquidity beneath early buyers. So as soon as I saw that, I saw this as a fractal break of structure. And this is that pattern. Here it is right here. We see an enticement to manipulate buyers, to grab liquidity from highs and create new lows. Do you guys see how I'm blowing your mind right now? How from the higher time frame, the 4-hour, we're seeing this same pattern. Then we go to the 15-minute, we're seeing the same pattern. Now we're on the 5-minute, we're seeing the same pattern. Why would you trade against what the higher time frame top-down analysis is telling you? Now we see the same pattern on the 5-minute time frame. This shit was too clutch. All I did was I waited for at least a 25% retracement, and I took my Fibonacci from the high to the low that broke structure and extended my fib over, and I just sat on my hands and I waited. And I said, okay, in the 79 to 62% discount, the only psychological level that I could see price selling from, which is the most premium range, because we know bank and institutions like to sell from the most premium range. And me as an investor, I'm not going to sell from anything without giving myself the best risk to reward, right? So I'm not going to sell from 50%, and I'm not going to chase the market and start putting in sell positions here. I'm going to wait to give myself the best risk to reward. So I waited until price came back to 70% discount. My stops were firmly above these highs. The reason why is because if this high gets broken, then this invalidates my bearish thesis. Why? Because if I'm looking at this as the market showing us the willingness to grab liquidity from highs and make new lows, it should not make a new high, right? It's logic. So I put my stop loss right above the high. My target areas were my 200% Fibonacci extension, which you can see now is a 1 to 5. I took partials at a 1 to 4, and you guys can watch this play out. Not only did we have a psychological rejection at the 6.2 level, not only did we have a 70% fib respect for the premium, but I also mentioned to you guys on Twitter, as long as we hold the 50% region, I'm going to be looking for shorts, and XRP is doomed. And look at this shit. Everybody else on XRP on Twitter and YouTube is bullish, bullish, bullish. I trade against what the retail herd is doing, and I trade in tandem with the banking institutions. Look at this. It's so pretty. Boom, taps me in. Done. It's that simple. It's the same freaking pattern, guys, as the higher time frame on the lower time frame. Now, whatever XRP does, who gives a flying? All I know is that in the moment, I was able to identify this pattern. I was able to identify manipulation. I was able to identify that the higher time frame was bearish, and I was able to identify a proper risk to reward to build confidence to not over leverage my account and stick with my analysis. It's literally It's that simple. And it doesn't seem simple because it's a lot all in one. But when you're in the flow state of mind, Ezra's traded with me in person before. He knows. It's just it's like breathing air and drinking water. It just flows. You just start
It's
to
really creepy watching the trade.
it's literally insane. Like, honest to God, if I would have said all of it that I just said to you guys to myself 6 years ago, I'd be like, what did you just say, bro? But now it's like you can't unsee it. You can't unsee it. So, respectively speaking, what I was looking for, again, to have proper logic behind your target and your reason behind the way that you're placing and taking trades, is overall on XRP. If we look and we go to the 10-minute, I saw trend line liquidity beneath these lows. Let me go to the 10-minute. Alrighty, everybody. I hope that you all enjoyed that video breakdown. I do apologize, but the Zoom had cut off due to an internet issue, and then I lost the rest of the recording. But I do hope that you all picked up some gems from the part of the breakdown that you did get to see. If anybody has any questions about the mentorship, make sure that you're not falling for any scams. You guys can email me at customersupport@cyprxtrading.com to schedule a Zoom call. That link is in the description down below for the official email. Blessings to you guys. Thank you for stopping by. As always, be cognizant, be aware, and I will see you guys in the next video breakdown.